This is the Wealth Junkie Show. Brought to you by CEO Capital Partners, Brendan Dukeman and Will Harvey. Your hosts deliver the daily fix you're looking for with exciting wealth-building secrets and strategies for what's working today. Listen to real-life stories straight from the mouths of some of the hottest, most successful entrepreneurs and financial freedom seekers to fuel your success addiction.
What is up, junkies? My name is Brandon Dukeman here with Will Harvey, and this is the Daily Wealth Junkie Show. Thanks for joining us today. We've got another daily awesome show for you here today. But first, be sure to follow us on Facebook at facebook.com/groups/wealthjunkies and subscribe to our show on wherever platform you're listening to. Subscribe, leave us a rating, and let us know how we're doing. And with that, I'm going to toss it right over to Will, and he's going to introduce our awesome guest for the day.
Lane, our guest's name today is Lane, and I'm gonna butcher his last name. So, Lane, how do you say your last name?
Kawaoka.
Kawaoka.
Yeah, definitely not how I would say it.
Yeah, exactly. So Lane is an apartment and mobile home investor, and he started out in the single family world like a lot of us, like myself, and even before that, he was an engineer. So with that, it's an interesting background. Lane, we'd love to hear more about how you got to where you are today.
Yeah, so I graduated college in 2007. Started out as an engineer, but just like I think a lot of people who are working professionals, your parents tell you to go to school, get a good job, work at that job, but then you have to work at that job for 40 years.
Absolutely. Yep.
My job kind of sucked. Out of college, for like civil engineers, like you got to go out and you got to like manage crews and do that kind of stuff.
Is that what you studied in college?
Yeah,
yep.
Yeah. I didn't.
What
really
school
like
did you go to?
University of Washington, the Huskies.
Okay, nice.
Yeah, so I was out there outside a lot, and I don't really like being outside too much. Maybe most engineers do. I don't know, but I didn't.
But you live in Hawaii. You don't like being outside?
Yeah, well, I like to be outside in Hawaii, but not up in the Northwest where it's like cold and dark all
right.
all
yeah,
the
good
time.
point.
Yeah, so I bought a house to live in, but I was never home because I was just traveling all the time for work. And they usually make the young guy go out and do all the traveling, which is kind of cool in the beginning because you're in first class because you get all the points,
Nice,
all the status, but for me, like it started to get old, and then I was never home. That's why. And I had this big house that I had, so I just started to rent it out. And I bought it for $350,000 back in 2009, and rented out for $2,200. The mortgage was $1,600. So
there you go.
Do the math. There was like a few hundred bucks of cash flow right there, and I was like, "Dang, I gotta keep doing this again and again." But I didn't know any of like the rules for like. That was like Class A rental, which is like more luxury type of rental. They're usually typically harder to keep full because most people in that kind of economic demographic, they're going to buy a house to live in.
Right.
Rent. So how did you buy it?
My strategy is just save up 20% down payment. I don't really screw around with no money down kind of stuff. I just go to my day job and save money. And when I was younger, I was a lot more frugal, and I would probably be able to save $30,000 to $50,000 a year every year. So that awesome. 30 to 50 grand year after year would just go right into down payments, utilizing Fannie Mae, Freddie Mac debt.
Right. So you had a pretty high wage job, and you were disciplined with your saving habits and everything, and that's what got you to be able to buy the house.
Yeah. Low overhead too. Because when I moved out of that property that I turned into my rental, I just lived on the company dime. I just stayed in their hotels, in company lodging all the time. So I really didn't have any rent to pay. So I just pocketed all that essentially.
That's awesome. That's
cool.
Sweet situation to be in.
Yeah, so I did that for a few years, and I bought another couple of units in Seattle. But then about 2012 happened, and the prices started to come up, and I wasn't able to cash flow on those properties. Then I learned about you don't invest in primary markets like California or Seattle or New York or Hawaii, because the rent to value ratios just don't make sense. Because
Yeah.
um, you know people talk about like going to auction. I mean, I went to one of those auctions one time, and it was just a bunch of like dumb money there, a bunch of guys from
Right.
Microsoft beating each other up, and I was like, nah, this isn't a good situation. So I bought one of those turnkey rentals out in Birmingham
Mm.
um, at the time, where it's all kind of fixed up, ready to go for you, and
Okay.
you don't visit the properties, and it worked for me.
And it's just
So,
managed by there's a third party manager that.
yeah, I usually get you can go through the turnkey provider and use them as a property manager. I usually tell my folks to go with a third party, just so
And
you have another.
how'd you come across this turnkey property?
I did a lot of networking online for people who were kind of doing the same thing. I tried to not talk to the people trying to sell me the properties, but the people who actually had who are just investors, passive investors.
Okay.
Unfortunately, a lot of these guys aren't at the local RIA. At the time I was in Seattle, a lot of the local investors, I'm sure you guys run into this a lot, but they're more into the fix and flipping.
Right.
There's a lot.
Wholesaling
Yeah,
and all.
there's tons of multifamily. I mean, single family meetups around this area, but
Yeah,
to find a multifamily meetup is few and far between.
right. And I think part of that is like real estate clubs. They're mostly designed for broke people, right? That's why they go there.
Mm-hmm.
Right.
The
Yeah,
way to
they're
get
chasing the
started.
quick money and
Right. I mean, so as a working professional with a decent salary, I didn't really have too much of a peer group, but I kind of luckily fell into finding rental properties in more secondary and tertiary markets. So I bought a bunch of properties in Birmingham, Atlanta, Indianapolis.
Okay.
Did a 1031 exchange for my 2 Seattle properties, and that was kind of how I got up to 11 rentals in 2016.
So you got up to 11 at the peak.
Yeah, for the single family homes. And then I realized, man, these single family homes suck. I mean, they definitely got me off the ground in terms of net worth, but
Yeah.
they're just not scalable. I mean, at a few $100 a cash flow per property, 10, 11 properties get you like a few $1,000s of passive cash flow,
Right.
which is awesome, right? Not complaining, but
there's bigger and better things out there.
yeah, I need more than $3,000 to
Right.
be financially free and to quit my day job. So,
Right. And you're taking on a lot of debt buying those properties, I'm sure.
yeah,
And
yeah.
it just doesn't make, there's no economies of scale.
And Fannie Mae and Freddie Mac will limit you to just 10 loans to your personal name. So,
Right.
that's kind of where you hit a barrier point. So at that point, I started to, my net worth was at a point where I could invest passively into larger syndications and deals. So that's what I do personally today. But, I go into dozens and dozens of private placements or in apartments and mobile home parks, and
Nice.
looking at some oil and gas investments, maybe life settlements, but
Diverse. I like it.
So how
Yeah.
did you go from doing the single family, the turnkey rentals? How did you get over to the mobile home parks and the apartments and all of that?
So I joined up with one of these mentorship groups where you pay a whole bunch of money, like 30
Okay.
grand, to kind of be a part of. And it got me like learning about the stuff, because it's totally different from single family homes. And
Right.
more importantly, the network is very different. It's totally different people you work with. And I think as your net worth gets above $500,000, that saying is much more true, which is your network is your net worth.
Absolutely.
You find
Yeah.
deals through the people and your network that you come into contact with. And unless you have a little bit of rental property experience under your belt, it's just not worth it for somebody to waste their time with you.
Mm-hmm.
Yeah, that's exactly right.
So were these groups that you were spending time with, were they local groups, or how? I know you said you spent for
Yeah,
someone
I mean, I had to
support?
fly to a lot of these things. You
Mhm.
know, a lot of them will be, they'll rally up in different or
Right.
southern mid mid southeast markets, and they're not cheap, that's for sure. But
Yeah,
a lot of times you pay for what you get, right? I mean,
absolutely,
Right.
absolutely.
there's a huge difference between a free meetup and the one that charges $10, right?
Yeah,
Yeah.
there is.
The caliber of people. Imagine what happens when you start to charge more than 1,000
Right.
for just one conference.
You weed out the tire kickers, that's for sure. That is for
Life's
sure.
too short for tire kickers.
Yeah.
Yeah,
You
that's
gotta-
right. So once you started doing that, you joined that group. Where how did you get into your first deal? And
Yeah, so
what happened after that?
it took me like 18 months to finally drop my first 50 grand into a deal.
Mhm.
But because I first originally went into it thinking I was going to be the guy doing everything, which I
Okay.
quickly realized that that's not the case. And I'm sure you guys have a big team, so
Yeah.
you guys know all about this. But I was like, I was kind of coming to a point where my net worth was, I had sort of hit that critical mass where why did I need to be the guy, taking on all this risk, trading my time for money. And whereas I just wanted to be a limited partner and just, I don't get paid as much, but still a lot better than the stock market, and
Right.
still
Oh yeah.
maybe probably a better return on my time than these single family home rental properties. And
No
it's a lot more
question.
diversification, different partners, different geographic location, different asset classes. And I just did the math, right? Like I took my net worth and I figured out 15% return on investment every year. And I was like, yeah, I mean, that'll make me happy,
Yeah, that
you know?
For sure.
make me happy too.
Yeah.
So you said it took about you said 18 months to invest your first dollar into a deal.
Yeah, because what I was doing was I was trying to just build my network of other passive investors.
Mhm.
I didn't really want to spend my time talking to sponsors and operators because they just say the same old every time. You
Right.
don't know, right? So I focused my time on talking to probably dozens and dozens of other passive investors doing it. And
Oh, I
what
see.
their
Because you
track
wanted
record.
to learn from them who the good operators were.
Right. I
Yeah.
want to be able to cross reference operators with real
Mm.
people who don't have
Yeah,
this
that's smart.
dog in the fight.
So when you're kind of vetting, a sponsor, what's some of the things that you're looking for to place your money?
Track record. Well, 50% is the person, right? So
Mhm.
that comes from your network of other passive investors to cross reference the guy. Track record and integrity. But the
Yeah.
other half is like the numbers. I mean, I learned how to underwrite the deals, put it into the analyzer with the P&Ls and the rent rolls, so I can cut through all the noise.
Mhm.
Yeah.
I don't really need to look at the pitch deck. I just run the numbers myself. There's nothing in that pitch deck that tells me if it's a good deal anyway.
Right, and that's all it is it's a pitch deck. It's trying to sell you something,
Right.
versus the numbers actually tell you what it is.
Right. Numbers don't lie. People do. So
Yeah, very true.
if you can get the raw data, and you can run the data, you can cut the code. Cut
Yeah,
through the noise.
that's exactly right. So how many properties are you invested in right now?
I think I got like 2,800 units today.
Nice.
And
Spread
are those
out.
all passive?
Yeah. I'm in probably, I think it's like 15 or 20 different individual deals.
Nice.
Yeah.
So you get some mailbox money.
Yeah. I mean,
I like it.
most times they'll take like 6 months to start cash flowing because a lot
Right.
of times the bank will kind of hold back a lot of the cash. The banks are the biggest partner in the deal, right? So
Right.
whatever they say goes. But I think for the last year I've been selling off my rental properties. Last year I sold 7 of them. This
So-
year I sold 2 of them. So I'm just kind of switching it from that stuff to slowly put it into these private placements.
So you're moving everything that you have from the turnkey rentals into these private placements.
Right.
Okay.
And I'm doing it slowly because the private placements, they don't come up very consistently, right?
Right.
Sometimes it's one every few months.
Mhm.
Sometimes it's like 2 a month. It's very inconsistent. And I don't want money sitting in my bank account not making anything. Too,
right.
so.
And that's the problem with the bank accounts. You know, people don't understand. They think just save, 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 but it's not doing a damn thing in your bank account. You know, I got my savings thing today statement. It's made 43 cents on. Yeah, I'm like, that's ridiculous.
Yeah,
You can retire.
Yeah.
I get that liquidity anxiety if my money is not sitting in the bank.
Right.
Yeah, exactly. Well, tell us about, why don't you tell us about a really, really good deal, maybe the best deal that you've gotten involved in so far as a passive, and then tell us one that might not have gone so well.
Yeah, I mean, so I'll kind of talk about my turnkey since it might be a little more affable to
Okay.
folks. And I mean, the turnkeys are very like hit or miss, and I think part of it is because it's so based on comps. It's based on the buyer's emotion.
Mm-hmm.
It's not like apartments where it's all based on net operating income and numbers and just a formula to come with the market value. But so, I mean, I've had properties where the best deals are where like the same tenant stays in there for years. I had one person just move out. They were in there since 2012.
Wow.
They were late a few times for sure, but for the most part, they were in there the whole time.
Okay.
Had another property that I bought for 80, then it sold for 140. Awesome.
Wow. Yeah.
That's great.
But then, I think what finally, broke the camel's back was a few of these, they had some pretty huge capex repairs because the tenant just screwed up the property as they got kicked out, as they got evicted or moved out.
Can you explain what does capex mean? What does it stand for?
Capital expenditures is the long tail word. So what that is you're going to have repairs on the property. For example, I guess you would categorize like trimming the hedges, mowing the lawn, fixing garbage disposal, fixing a washer dryer, something like that's going to be categorized as a repair. And that's going to be usually about 10% of your income should be set aside for that every year. But you should also account for CapEx too, which is like the bigger components of the house, like the roof, the washer dryer, the HVAC.
So basically the things that are supposed to last longer, but and have a higher price tag to replace.
Yeah. Like I have a bunch of free files for like investors, but I have like a CapEx calculator.
Mm-hmm.
So it's just basically a spreadsheet with all like, there must be a dozen things on there, like all these bigger CapEx components. And then like the normal price for it. And then it also has a column for like average life. I mean, and it's done typical engineering form, life cycle cost analysis, basically what it is. And it takes the life divided by the average price of the thing and gives you like a breakdown of like per month, this is how much you should probably put away because these expenses will happen. You're going to have to replace that roof every 10 to 20 years. We know that.
Yep.
So I think this is where a lot of investors, they get caught. They don't account for this stuff, nor do they track these things, but they could be going red on a deal just because they have to be paying for this stuff and they didn't account for this.
Right. They think that, hey, I got told this roof's only 10 years old. I can get 10 more years out of it. Or then they get a huge storm and rips up the roof a little.
Yeah. Or like, most investors are probably like this. They're unsophisticated and they think that just because they're cash flowing, it's a good deal.
Mm-hmm.
Right.
Number one, may not be accounting for all these repairs and CapEx and a property manager to do the investment for them, or they might have too much equity in the property, not making, like you said, not making anything, just no different than a bank account.
Yeah. Deals in the hood, usually cash flow,
Yeah. Places in bad areas, right?
Yep.
The opportunity zone.
Yeah,
project.
Exactly. And to speak on what you just mentioned about not setting aside money. So I have 3 rentals that I own myself, and one of those I've just been having a ton of HVAC issues with it, and it's just driving nuts. The tenant part of it was 100 degrees out, and she was running it at like 65. So that's part of it. It was just getting beat up. But that's a great point, because I really didn't. I run those a little bit. It's me. I'm not dealing with any investors with those. It's just myself. So I run them a little bit unorganized compared to how we do things in the apartment world. So I, it got to where it was frustrating. I kept having to write a check for this, and if I simply just had an account with that money set aside for maintenance, it would have been much easier. And it wasn't a big deal, but you hit the nail on the head where you talk about people just don't account for that stuff, and myself included. So,
Yeah,
and they
yeah.
should.
I mean, the frustrating thing about that HVAC is like you're supposed to change out those filters, right?
Yeah,
Every
right.
every once in a while, but the damn tenants never do
Yeah,
that.
Right.
I looked at it. The thing was black and just
Yeah.
all messed up. So
Where like
yeah,
apartments, I don't know how you guys do it, but like apartments, I mean, we expect very little from the average apartment tenant, so we do it for them.
right.
Right. Right.
Yeah, exactly.
It
Yeah.
is.
Yeah,
But that's kind of why they live in the apartment. They're paying for the management
Yeah.
fees and things like that. And
yeah,
so,
Yeah. Where
so
it's not as practical for you to do that on your single family homes.
right,
exactly.
right. You kind of you're thinking, hey, they're living in a home by themselves. They might want to take care of something that
They're an adult
right. They're an adult, whereas
now.
Yeah.
But so Lane, let's say someone, early 20s, kind of they have a decent job, they're getting paid all right. They hear this and how you kind of got started. What would you say to someone? How can they get started in this, or where should they get started if they're interested in the real estate world?
Yeah, I mean, great question. I mean, because I think most people are listening, they see the three of us and they're like, well, these guys make it look easy with the apartments and these bigger deals, but it took us a while to get up to this point.
Mm-hmm.
And I think they're listening to all these like changing out the filters on the HVAC, and they're like, oh, I like that apartment. The apartment sounds a lot better.
Right.
And yeah, heck yeah, apartments are way better than single family homes. But unless your net worth is like, in my opinion, $500,000 or more, you don't have the money to
Right.
go into the
And
bigger
you're
stuff.
probably not going to save your way up to a $500,000 net worth, right?
Yeah, I mean, you got to start small. I mean, I started with single family homes, and that's the way you get a little bit of appreciation here, appreciation there. As much as we preach cash flow all the time, um, cash flow keeps you moving in times of recession, but the appreciation is what makes you wealthy
Mm-hmm.
at the time.
Yeah, and as Grant
That's a
Cardone
good point.
says, cash flow's king.
Yeah.
So that's
Yeah.
important.
Well, tell us about. I'm looking at your background there. Tell us about some of those companies, some of those websites that I see there. With the simple
Oh, okay.
passive cash flow and REI Aloha.
Yeah, I mean, Simple Passive Cash Flow is kind of my my blog and my podcast that I started back in 2016. And initially I was just all my friends were asking me like, how do you buy these properties out of state where you don't even visit it? And then I'm sure you guys have friends like this too, that they ask you these million and one questions and then you tell them and they don't do anything.
Yep.
So I just started to like record it and like write it down on that website. So it became more of like a follow me journey type of website. So
Oh, nice.
now I just refer them to that, so I have to waste my time.
Right. You can reach more people with it too.
Yeah. And then the crowdfund Aloha site, that's kind of my people like to copy what I do and join me in deals. So that's what that is. And then Ari Aloha is kind of my attempt to make life for people who are willing to try something else and invest in alternative assets in Hawaii. That's kind of my real estate club that I run here locally for passive investors.
Very cool.
So
yeah.
Go ahead, Will.
I was gonna say, what do you guys do there? What do you talk about at that meetup?
Well, we are kind of like a smaller group. Most of us are like accredited investors, so it's not like your average real estate club. It's a little secret.
So you're getting
handshakes,
movers and shakers coming.
Yeah, and we're talking about not really about deals because we're more passive investors, but we're talking about like what are we doing for taxes? What are we doing for legal? sheltering and
the
stuff like
strategy
that.
part of the money side.
Right, right. It's more holistic wealth building stuff instead of
Okay.
like, hey man, I got this deal, right?
Right. Very cool.
Very cool. All right, Lane. So I think we're going to switch over and get right into our moments of truth section. It's the same 7 questions that we ask all our guests here, and I'm going to dive right in with the first question. Who is your success role model?
I probably have a whole bunch of people that I've kind of pick and choose from. I always think like people have their downsides, but if you can take all the upsides of a lot of people, that's what I do. So I've kind of joined a bunch of masterminds, and those are where I get those people from.
Okay, so just some personal people that you know.
Yeah, people that were an engineer, doctor, lawyer, but maybe 10, 20 years into the future, just seeing how they progressed, and that's how I kind of
Hey, that's great.
for.
Nice. Okay. What is your biggest success?
I quit my job 6 months ago. That was kind of cool.
Great. Congratulations.
Yeah, talk about that. What was it like?
Well, I didn't really tell anybody. I just left. I just stayed late one Friday and just took all my stuff home.
Fuck it,
So
I'm out of here.
Yeah, I'm just like, I don't want to answer the questions, like, what are you gonna do? Oh, what are you gonna do? Like, be a realtor? I'm like, no, I'm not going to be a realtor.
That's
I'm going to be sitting at home making money while not doing anything. And
yeah,
you're going to wonder how the hell you do that.
Yeah, I mean, some people just don't understand, right? I mean, that was the nicest thing about, like, the people in W2 were all living in the cubicle land. It's just a lot of victim and mentality, and it's kind of draining.
Yeah, I deal with it on a daily basis.
Not to go on a tangent here, but what would you tell someone that sees a path ahead of them and is just going back and forth on whether they should leave, whether they should stay? What would you tell that person? How did you get the guts to walk away from what I assume was a high paying job?
I mean, my passive income exceeded my daily expenses. I mean, for me, it was, I should have done it earlier, to be honest, but I didn't really take a jump for it.
You heard it here. He said he would have done it earlier, so do it as soon as possible.
Yeah.
Well, I don't know. I don't know. I mean, that's where you should have a mentor that knows your business and knows what you're doing. Because I think a lot of people, they're like, screw it, I'm gonna fire the boss, right?
Burning the ships,
right? Yeah, I'm burning the boats. And I think that's an ego thing. And I think a lot of people, they quit too soon and they burn out. So, but you never hear from them, right? Because they're all shameful and they don't say anything.
Right.
So,
yeah, good point.
There's a point for everybody, but I think a lot of people are like, kind of like, burn the boats, do it, yeah. And then you never hear from that. What happened to that guy? I don't know.
Yeah. He's struggling. He's selling his house just to get by.
Yeah. So there's a happy medium there.
Right.
Yeah. So Lane, now that you're retired, what does a typical day for you look like?
I wake up around 7. Not a morning guy or a miracle morning type of person, but I get up, and then I go right to my computer and just start answering emails from folks that have reached out to me. And then, I get to pick and choose what I want to do. I don't work with people I don't like, and I don't do projects I don't want to do. So I get, again, like moving from a life of obligation and of these meetings you have to go to, or you have to be at work at 8 o'clock.
Right.
I don't do any of that stuff anymore. I just do things because I want to do it.
That's awesome. And that's what people are striving for. They want to be able to answer to their own beat. So
yeah, exactly. What's your favorite quote?
Things happen for a reason, or things don't happen to you but for you. It's Tony Robbins.
Okay.
When I can think of several times this happened when, like in 2012, when the prices were going up in Seattle and nothing was cash flowing. I was like, all right, my investing career is over. But then I found out-of-state rentals, right? That was a shitty thing that happened, that I couldn't find cash flow in Seattle, but it got me to do out-of-state investing.
Nice.
And then when I realized that I was paying 20, 30, 40 grand to repair my properties after the tenant messed it up, I saw the light, and I'm like, I need to get into more scalable type of investments.
Nice.
So,
So you just pivoted when you were handed different obstacles and challenges.
yeah, and that's why I hear like a lot of entrepreneurs who've been kind of rocked multiple times more than myself. They start to get really resilient, right? You start to see
Mhm.
bad things as, well, this is just a start of a pivot. You just gotta go with it.
Yeah.
You know?
Yeah. All right, Lane, what are some of your hobbies?
I like to work out. I like to play basketball. I like to do some CrossFit.
Awesome.
Yeah, just like
Very
to
cool.
hang out.
Love
Yeah.
it.
CrossFit, I was into it for a while and then got lazy and I got back into it and then got lazy once more. But CrossFit's great. Everybody hates
Oh
on it.
well.
Yeah, everybody
Got to
hates
get
on
back
it.
into it.
Yeah.
Yeah, everybody says they get injured, but maybe that's
Yeah.
just a vocal minority.
I've never got injured on it.
Yeah.
Although my mom did break her ankle coming down from a rope climb, but that's another day. So
What's the best business book that you've read?
Can't really think of one off the top of my head. I don't really like to read too many. I'm starting getting more into reading books, but none that really has stood out to me. 4 Hour Work Week, but I think everybody's read that.
Yeah. Well, that's an awesome book. What about Rich Dad Poor Dad?
I actually didn't read that until like a few years into investing.
Really?
Yeah,
Okay.
hey, that's
because I've heard about it, up to then, but then I really didn't read it until that point. But I mean,
He's,
That's funny.
Robert Kiyosaki's from Hawaii, isn't he?
yeah,
Yeah.
I am
Yeah.
reading on Deep Work right now. I mean, that's kind of a cool book. The premise is, everybody's doing shallow work, like checking Instagram or doing a quick email. But if you look at the successful people in life, nobody really gets paid for that. It's a very competitive type of kind of
True.
job, I guess. You got to figure out where you can dedicate super focus and do deep work.
Oh, deep work. Okay.
All right, last question here, Lane. If there's one key piece of advice you could leave our listeners with about achieving success, what do you think it would be?
I would say it's self-awareness is probably the biggest thing that I see. I mean, I have free calls with aspiring investors, and I don't know what really works, but I can tell you I sure as heck know what doesn't work. I can pretty
And
much
that's just as important, I think, to learn
Right.
from.
Right. So
Yeah, absolutely.
what I tell people is figure out what you have in terms of the 3 major resources, which is time, money, and knowledge. Yeah, you might not know very much, but if you're broke, you should be doing these type of activities. If you've got some cash from a good day job and you don't have too much time, well, you should do these type of things. So putting your efforts into the right, based on your attributes.
Awesome.
Is probably
That's
the best
great.
thing.
Awesome.
Yeah, that is awesome.
So, Lane, wrapping things up here, you said you got a free call that you provide some of your potential investors. How can our listeners get in contact with you?
Yeah, you can get a free call, but you got to at least put in the effort of listening to my first 20 podcasts. So it's not just a completely like cold
Right.
thing.
So they got some homework to do.
Yeah, I imagine that. And imagine all the people who aren't going to do that.
Yeah.
Right.
There's a quiz on the call, so he's going to
Yeah. Yeah. I'm going to be kind of upset if you didn't listen to the first 20 podcasts.
Yeah,
Put it
that
that way.
That's funny.
Yeah, but yeah, I mean, that's the thing, right? People don't want to put in the work.
Right.
Right? I think the stuff isn't that hard.
Yeah.
You got to be more consistent and do it over a longer period of time. But you'll get there. It's not the get rich quick thing.
No,
That's
it's
right.
definitely not.
It's just
So,
millennials, man. They want everything handed to them.
Yeah, yeah. I guess I'm kind of a millennial too.
Well,
yeah, we all are.
We
Right?
all are.
Yeah,
So-
damn those guys.
Yeah.
the name of your podcast so that our listeners can start getting on that 20 episodes to make that call with you.
Yeah, Simple Passive Cash Flow is the podcast.
Awesome.
Cool.
All right, Lane. Well, we appreciate you spending time with us today and taking the time out of your day to speak with us. Again, for our listeners, don't forget, follow us on Facebook at facebook.com/groups/wealth junkies. And also don't forget to subscribe to our show so you don't miss any of our daily interviews that we are doing. And again, Lane, he's got 20 episodes that you need to watch prior to reaching out to him. Lane, we appreciate you spending time with us today.
All right. Aloha, guys.
Yep.
Thank you.
Thanks, Lane.
You've been listening to the Daily Wealth Junkie Show, brought to you by CEO Capital Partners. CEO Capital Partners works with business owners and executives to build passive income through multifamily apartment syndications. For more information about how you can invest in quality multifamily real estate assets and build significant streams of passive income, visit us today at ceocapitalpartners.com.